Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call, 24th September 2025. Tech stumbled overnight as Powell cautioned the market on further rate cuts. He was speaking at where was he speaking? He was speaking at a Chicago meeting overnight. He said that warned that persistent inflation and still resilient labour market could complicate further easing. So there's been a lot of Fed speakers this week, diverging opinions from both, the likes of Austin Goolsbee, obviously Trump's new man on the Fed committee as well, who was the dissenter at 50, and yeah, Austin Goolsbee was hinting at future cuts if inflation continues to cool. Aussie market rallied back a little bit yesterday, led by the banks, and a little bit in the obviously in the gold sector, in the lithium sector, in the materials as well. But we're back to sort of strong buys here for the Aussie market, but the US market, hourly there just switching to sell. We're still strong buys across the board overall in equities, but as you can see here, S&P was down a half, Nasdaq was down 0.73, the Russell down just a smidge. Essentially, we had Nvidia come away a little bit. Everyone's sort of getting wise to this. OpenAI doing a deal with Nvidia, doing a deal with Oracle on the same $100 billion flooding around. In the same fashion. We seem to have lost our slides here for the moment. So I will try and bring those back up. Essentially what we had was Nvidia falling away there overnight, and then the rest of the market was a little bit soft, but everyone's very much getting a little bit cautious on these moves, because we are at pretty overvalued levels. So I faced a little bit of a technical issue there. Not in the office this morning. My daughter is graduating, so I'm at home. So Nvidia down 2.8, Amazon down 3, Oracle down as well, and as you can see, the rest of the market was a little bit, was not too bad overall. Tesla had a little bit of cooling, but the market's very much dominated by these big, large squares, and that's really the reality of it. It's been helping the market considerably over the last couple of months, particularly. And we did have Micron have earnings as well as we shut. They were up about 2 or 3% in the aftermarket. But this is what they're calling the infinite money glitch here at the moment. And it's just the same. What's been happening over the last few days is, they're doing deals with each other. And it's essentially the same 100 billion being washed around. But each time, each company is getting a multiple lift out of it, despite the fact that it's net, it's the same 100 billion. So we're really, I think the market is wising up a touch overall. Trump spoke at the UN last night. There's a few shenanigans going on. Apparently they shut down his teleprompter. They shut down the travelator lifts going into it. He obviously wasn't particularly welcome there. He told the world nations that their countries were going to hell because of their open border policies. And he said that he was very good at fixing it. Who'd have thought that Trump would give himself a pat on the back yet again? So we did have, we got a 75% chance of more, or 90% chance of another cut in October, and then we got 75% chance of another one in December. PMI slipped a little bit in the US to 53.6, still expansionary though, but it undershot expectations. Both manufacturing and services activity declined modestly from the prior month. So this cooling economy is still very a very prevalent theme, and we haven't had great economic numbers. Yesterday as well, we did have Trump banning Tylenol, essentially. Watching the president try to deliver medical terms was possibly one of the more uncomfortable pieces of TV I've ever seen. But we that obviously affected some of that medical market. He's talking about increasing the likelihood of autism and all sorts. I don't know how much of it's actually scientifically backed, fairly anecdotal, which I'm sure the science community will be stoked with. Costco has got some earnings tomorrow as well. We won't really have. Our main focus today will be CPI in Australia, and it's the monthly number, and I would imagine that while it might have a small effect today, it's still at that 2.9 expected year on year, and that's still pretty high. So that kind of does take some. Well, I would imagine anything higher in the threes is going to really take those rate cuts off the table. So we're talking, whilst everyone's dancing around the word, we are very much in a stagflationary period here with inflation around that 3% mark and a weakening economy. So we've seen gold made fresh records last night, got above 3,800. Silver made fresh records as well, but finished slightly lower. Platinum was the big winner last night, up 4%, edging towards that 1,500 mark. And uranium had a breather for the first time, but in quite some time, but obviously up significantly over the course of the week. Trump also was talking about taking a stake in Lithium Americas. And that essentially set that stock up 80%. That might buoy the lithium sector today at some stage, because we've had a bit of positivity in that lithium sector over the course of the last couple of weeks. Pilbara, I believe, still one of the more shorted stocks on the ASX, and along with those uranium names as well. So you got Boss Energy at 20%, Pilbara at 18%, Paladin at 15%, and we've got and Mineral Resources number 7 and 11. So we have seen some of those radiopharmaceutical stocks drop out significantly out of the most shorted stocks. But if I were the shorters in these stocks here, given what's going on in those lithium and uranium sectors, I'd be very concerned, and I'd be starting to unwind those positions. So one bit of news which is rarely talked about as well is the money supply. So obviously a key driver of inflation when they're printing more money. We hit a fresh record last night in M2 money supply, or over the course of the week they published the numbers. So I've got it here. This is the most recent. So this is a bump in COVID where we printed more money. They sort of started to try and pull it back in, and unsuccessfully, obviously. But we've got here, that's gold in the maroon there. We've got silver and then platinum in the green. Basically, what you can see here on the this is a much longer term chart, back to the mid 70s here, and I've just marked in red periods of noted stagflation. So that was obviously the GFC here. Money supply had a bit of a bump there, but it's more to do with the scale. And we had that stagflation period back in the late 70s there, which we saw significant rise in value for precious metals. Gold tends to be the leader. Sometimes you'll get sometimes you will get the platinum leading, but for different reasons, just for more probably geopolitical reasons overall. But you can just sort of see now that gold's playing significant catch up. It usually is a bit of a lag. As you can see here, you've got that huge spike in money supply out of COVID, which is this one here, and then it's going again. But the chart gets steeper and steeper. So, I mean, you're going to get inflation if you keep printing money, and that seems to be the Fed and the US government's solution to everything is just cut rates, print money, cut rates, print money. It's a miracle that inflation hasn't gone hyper, to be brutally honest with you. So I would expect silver and platinum to play some significant catch up. Gold, as we've mentioned in the past, we're more so in the gold miners. The gold miners are very cheap here at the moment, particularly with gold at 3,800. when you've got in the GDX ETF as it stands, I think the average on but looking backwards, all-in sustaining costs for the top 10 producers in that ETF is around about $1,307. So even call it $1,400, and we're nearly at 200% margins. So look, and that's going to have a much larger effect on earnings per share, and then you'll probably get out of a further jump in the gold price. So that's why we're favouring the gold miners at the moment, and historically those margins are at record highs. So that's why we've gone down that road. You can probably expect this to be a fairly quiet day. It'll be a little bit risk off. SPY futures were down 0.3, and we'll be just essentially watching for that inflation number at 11:30, and then essentially we don't have any more economic numbers the final GDP and final PCE, but and the Fed speakers are starting to pull up, and we do have a little bit of risk as well. 30-year Japanese bond yields and 10-year Japanese bond yields have been spiking to highs. So there is a small risk of that carry trade happening as well, particularly with that US dollar on 14, 15-year key support on the trend line. So essentially, there's a few things to watch out for. But look, at this stage, I think we probably just drift sideways or higher for the rest of the week. And we'll roll into that payrolls number, which will be Friday week. And I dare say people will be crossing their fingers and toes. That's not a disastrous number as well. So yeah, we now just another reminder. Security Super Cycle webinars on the Tuesday, the 7th of October. The stock picks from our last hyperscaling AI webinar are up on average 31% versus the index only up 3.6 in just 4 weeks. So obviously do yourself a favour there and get involved in that webinar. Just go and check out our socials, and you'll be able to find the link there to go and register. But hope everyone has a great day, and we'll speak again tomorrow.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.